Hey, everybody. Before we get started, I'd like to ask you to purchase my new book. It's called Exit Ready Marketing, and it's already a #1 Amazon bestseller. And it covers all the core concepts that we take our clients through here at How to SaaS. It's a great read for founders, investors, operating partners, and marketers. And there's a ton of value that you're going to be able to bring back to your respective companies based on the content that's inside this book. So my ask is go buy the book. It's available on Amazon and on your Kindle, on Barnes and Noble, and even Apple Books. Give it a read. Let me know what you think about the content, and hopefully it helps you grow your respective companies. So with that said, let's jump right in and enjoy today's podcast.
One of the biggest things our prospective or existing portfolio companies or partner companies tell us they want help with, the number one requested thing is go to market. The number one requested thing is marketing, because the best kind of value add is organic growth. Because unlike inorganic growth, you don't have to pay for it. Controlling costs, okay, that's all well and good, but that ain't nearly as much fun as the champagne bottles popping because things are growing, right? The growth's the holy grail.
Welcome to the Private Equity Value Creation Podcast, where we interview leading investors, operators, bankers, and advisors to help you answer one question: how do we increase the enterprise value of our companies? My name is Shiv and each episode I will dive deep with a guest to help you become a better value creator and capital allocator. So with that said, let's jump right in and let's get started with today's episode. My guest today is Alex Western, and he is the managing director at Terminus Capital Partners. And what I really enjoyed about this conversation with Alex is that he's a big Patrick Lencioni fan, and we talked about a bunch of the books that Patrick has written, and especially about this idea of a Vision Prism and how investors, CEOs, and founders can take that as a way to think about how they build out their companies and really get everyone in the organization aligned around common objectives. It's a topic that's near and dear to my heart in terms of how we build our own company and try to get everybody on the same page with transparent metrics and thinking about who we're trying to serve and what types of products and offerings we take to market. And Alex really brings that to life with bringing a lot of examples from his own portfolio so that the audience can learn a ton from it. So I really hope you take away from it as much as I did. I think there's a lot of great lessons in there for companies in terms of how to grow slowly and meticulously by focusing on the right mission and really working your way through that step by step, where in a few years' time, you have a ton of enterprise value that's created. So with that said, I'll leave you to it. Enjoy the episode. All right, Alex, welcome to the show. How's it going?
Really well. How about you?
Good. Excited to have you on. So why don't we start with your background and the firm, and we'll take it from there.
Sure. Again, Alex Western. Terminus Capital Partners, or TCP, is a B2B software or enterprise software focused private equity firm. So all we do is partner with businesses that are 10 to 20, 25 million in ARR. And they're either previously venture-backed or they're founder-led and they haven't previously had institutional capital. But the whole idea is to be real business-building partners alongside those management teams to take on average, let's call it a 10 million ARR company to a 25, 30, $40 million ARR company, both by organic growth and inorganic growth, in order to build market leaders in specific niches that really matter to the overall economy and the company's customers. So we're business builders. And my personal background is just pretty plain vanilla, management consulting at McKinsey, private equity at a firm called Audax Group, hedge fund investing at a firm called GMT Capital. And I founded TCP in 2017 as an independent sponsor. And we formally spun out independently, and we've been investing on our own since 2020.
Awesome. And a lot of firms and sponsors exist that are looking for these 10 to 25 million-ish companies, want to 3X it, eventually exit it. What makes what you're doing at Terminus different?
Well, I think one thing is how we source. And I hate that word because what it really pertains to is how we think about the landscape and industries or specific companies where we can have an outsized impact and really focusing on those, and then getting our name out there in the right way. And there's no better, we don't do a lot of marketing, so there's no better way than sort of reputation, and finding the right companies to partner with. So the way we source and build relationships is one big differentiator. Another big differentiator, we call it expert restructuring, but there are a few legs to that stool. Number one, a team of operators. And I don't mean consultants. I mean true experienced software operators. And I don't also mean people who are retired and no longer do the work. I mean people who really roll up their sleeves and help. Having the operations team that we have and being operationally oriented business builders like me or anyone, even on the deal team, even those who aren't on the operations team. That's one leg to that stool. Another leg to that stool is processes, playbooks, documented best practices. You'll hear a lot about Vista's standard operating procedures, for example. We have done an incredible amount of work to research and benchmark and back solve to how some of the best companies around do it, and really distill that down to secret sauce. What that doesn't mean is that we tell companies how to do anything. That's not what it means. What it does mean is we have a Chinese menu of sorts for people to pick from, depending on what challenge they're facing or what they want to tackle or how they want to go about things. When someone says, hey, this is a problem I want to solve, X or Y or Z, as opposed to saying, oh, great, like we'll be your thought partner in that. We are their thought partner in that, but we also come with a view and real processes that can actually sort of make a difference. And then we customize it to whatever's actually going on. So that expert restructuring is probably the second big differentiator. The third is buy and build. We are like outsourced corporate development for the companies that we partner with. We average 3 add-ons per platform. The whole idea in building a market leader in a specific niche is not just growing the top line organically, sale by sale by sale, but also thinking about exactly what company do you want to build? Like what is the grand best possible vision for this company, this industry? And building that usually also means buying some adjacent market companies or companies that have something new you can add to your product suite, or a company that adds transformative scale, and putting those together in I hesitate to use the word synergistic way, but in a value added way. Those 3 things are the differentiators that we keep coming back to: how we source, how we help companies operate, and how we buy and build.
And there's this concept that I've seen you talk about in the past called this Vision Prism. And why don't you touch on that and explain how that factors into all 3 of those areas?
Yeah. Okay, cool. So the Vision Prism. So one of the first things we do when we are doing our diligence, deciding whether to partner with a company, starting to work with a management team, is we really focus on what some people call organizational clarity. There's no better guru for this, by the way, than Patrick Lencioni. I'm a voracious reader. We love his books, 4 Obsessions of an Extraordinary Executive, 5 Dysfunctions of a Team, 5 Temptations of a CEO. We actually recommend them to a lot of our portfolio companies. But organizational clarity, getting vision right, values right, having that drive strategy, just getting on the same page in terms of chapter 1 issues. So one of the cornerstone components of establishing and driving organizational clarity is what you just cited, the Vision Prism. So like, what's the point of organizational clarity? It's, hey, a lot of companies are actually kind of just going through the motions haphazardly. Like if you were to ask different people who work at a company, what are you really doing? Or what are you working towards? Or what's the vision? Or what? It's shocking how often the answers you get aren't the same, that they aren't even really similar, or that a management team thinks or a leadership team thinks they're pretty clear about, why do I exist? What problem do I solve? What's my mission? Where am I going? But that hasn't propagated down. That hasn't translated. And so there actually isn't nearly as much alignment as people think. this sounds kind of obvious. This is not secret sauce. I mean, it is secret sauce actually doing it, but getting that vision right and getting the right stakeholders aligned behind it, we find that's one of the most important things we can do. So what's the Vision Prism? The idea of a prism that like it's one thing, but there are different facets to it, right? Different reflections or different facets or different sides of the prism. The concept is we should know exactly what our vision is. Why does this company exist? What does it do in layman's terms? What are its strategic levers? Where's the market now? Where is it going? What's our place in it? How do we get to leadership? We need to have crystal clear answers to those questions. But that isn't enough because it needs to work, like it needs to fit like a jigsaw puzzle piece with all the stakeholders who are around the table for our company. So, one example is the rest of the value chain. If our vision or if what we're doing or if our strategy doesn't simultaneously add value for clients and for our value chain or suppliers, like if it isn't win-win-win, that's going to be a structural impediment to a company being successful. So one facet of the Vision Prism is how do we explain our vision to clients in a really empathetic way that isn't about us, it's actually about the clients? How do we explain our vision in a way that really resonates with suppliers? So it's not just like, hey, this is what we're trying to do. And they're like, well, great. But like, why do I care? What's in that for me? Like, why would I help you? You see what I'm saying? And that's the stakeholders, the value chain, the clients and suppliers are one side of it. But there's also the employee, contractor, the in the company side of it. There's also the board or the ownership or the shareholder side of it. And all those things need to fit together, because a mistake that a lot of companies make is not getting that clarity in the first place. Even if they get the clarity, sometimes not making sure that it works for everybody around the table. So you'll hear some people who are backed by private equity complain about, well, I certainly see how increasing revenues and decreasing costs and driving EBITDA and cash flow, I see how that's positive for the investors. But why in the world is that positive for me as an employee being asked to do more with less and I'm just stressed out, right? If the vision doesn't work for everyone, the company's not going to be as successful as it can be.
Completely agree. We're actually huge fans of Patrick Lencioni here as well. And we built out the strategic framework, and any company that I've built we've done that exercise where it's like, why do we exist? Who do we serve? How do we solve their problems? And what are our core values? And what's next as a priority item in order to get there? And when we come into companies, we find that a lot of them don't have that shared understanding. So it's really difficult to move towards a common objective.
It sounds like you've read The Advantage too. That's one of the books I forgot to mention.
Yeah, that's a great book. Essential reading for founders.
There you go.
Yeah. But I guess connected to that, though, you have this idea that like you have to get to a shared purpose or shared vision, but then you also have to connect that to investor objectives. And you just touched on that at the end and what the financial goals are. And so how do you marry those two ideas together?
How do we marry the Vision Prism with the financial goals?
Yeah, or like, let's say you have an investment thesis behind a company, or you add on or tuck in an acquisition, and then get everybody that's involved beyond just the investors and the executive team, but like the suppliers, like you mentioned, partners, employees. How do you get them all aligned against that while staying true to the initial reason that the business exists and who they're trying to serve?
I guess we kind of do it like that old saying about how somebody eats an elephant, one bite at a time. Maybe what I'll do is maybe we'll step through kind of a real life example without giving away any confidential information. So a company called Catabat, which we invested in August of 2020. So Catabat provides credit collection software to big banks. That's a great company with a great leadership team. they had been backed by many venture capital firms who had written small checks. The only issue was this. The original founder left the company, and that may or may not have been a little messy. And Catabat is a great company in a great industry, but it's not a great fit for what I'll call, steroid injected growth, grow at all costs, 50 gazillion dollar TAM, even bigger than the size of GDP. Not every company is a perfect fit for venture. So great product, great space, great company, good people doing good work who you fast forward the clock, dozen years, and people felt like they were stuck in second gear a little bit. And everyone had kind of created their own rationale for like, why am I here? What are we doing? How are we kind of putting one foot in front of the other? And so there wasn't there wasn't that organizational clarity. There wasn't that vision prism, if you will. So Ray Peloso, that CEO, legit a friend of mine, to this day, we obviously met through the process. He and I spent a lot of time thinking about like, what is the vision for Catabat? And what we came up with was, it's about getting the right message to the right borrower at the right time in the right way. And on the one hand, it's a little pithy, and that's good because it needs to be memorable for us. It needs to be memorable for customers. It's good for marketing. It's helpful for the employees to sort of have that jingle. But like that took on real meaning for us. So one example is like, if you borrow from a bank and the bank is just trying to send you updates, hey, bill's coming due, or maybe, a bill is past due by 5 days. I guess there's two ways to approach things. There's a bank saying, hey, I'm just trying to service a loan. The other way to approach things is, credit collections. And that kind of has a menacing, connotation, let's say. And so the example is we realized, you know what? Catabat is all about nurturing customer experience for those borrowers. And by nurturing customer experience for those borrowers, they're better payers. And if they're better payers, the banks can actually charge lower costs of capital, and the banks can less often have to result to charge-offs or sort of more aggressive legalistic follow-ups. I forgot to pay a co-payment for a doctor and I moved away from that location long since. I get this nastygram in the mail. This is an attempt to collect a debt. All right, it's $25. Like, relax. So what we did with Catabat started with that vision. Thought about how do we actually help clients reach the most amount of borrowers, but then how do we help them reach them in the right way so the borrowers are actually happy and they're repeat customers for the banks. Well, that in turn makes the banks happy. And from an employee perspective, it's, wait a minute, let's get really focused on our product roadmap because we actually had too many initiatives and different customers want different things because we were straying from our vision and people felt disorganized. Let's get back to basics. Now that we know exactly why this company exists, what's the gap between exactly what this product does and what we want it to do? Great. Let's build the product roadmap around that. Then the Vision Prism is applying to R&D. Then how does the Vision Prism, that was your original question, how does it apply back to the investors or the board? Without giving away confidential information, I'll put it this way. We invest in Catabat, and there is a, let's call it $300 to $600-ish million market, and there are a lot of players. And there's no clear winner because there are lots of ways to skin the cat. But there's an opportunity to create a clear winner. And if there's an opportunity to create a clear winner, the leading company in a space can deliver fabulous returns for its investors, right? So that's the opportunity that we saw. And we saw it was only going to work if it really worked. Not if we were like extracting value or anyone's extracting value, but rather if we really created value and the market rewarded that. And that is what happened. That company grew tremendously in its top line, and the enterprise value of the company almost quadrupled in a year. And that company ended up becoming the technological backbone for a company that doesn't just do credit collection in a narrow sense. It does broader revenue cycle management, accounts receivable management. So So then that company becomes part of the engine of a company which serves an even broader ecosystem where, you know what, companies managing receivables well and just general companies, the capital markets working better, that's a good thing for everybody. So you find those win-win opportunities and you actually try to deliver on them. And you certainly get rewarded for that in your fair share, but the benefit is you're rewarded in a way that's really beneficial for your reputation and for how you work with people. So then you get referrals. And then if you do it again, it actually becomes kind of a positive feedback loop.
Mhm. Yeah, what's interesting as you spoke about that example is that there's the vision for a company and the mission and why it exists. And somewhere along the way, it's lost across all functions. But the more that permeates through those functions, the more successful a company can become. As I'm hearing you speak, I'm thinking about just getting your product marketing right, knowing what exactly it is that you want to say and how you position yourself in a marketplace, knowing who's the ideal customer, who are you going after, where are you more likely to win, who are you likely to serve, what are the exact offerings that you're bringing to those customers, and then potentially saying no to other opportunities because it maybe deviates from your mission. And then also it affects how you think about your product roadmap, which features you prioritize, what the sales team is focused on. So it's not just about the vision, but it kind of brings, like you said earlier, organizational clarity to everybody in terms of what everyone's focused on.
100%. And I like how you touched it. I like how you brought that to marketing. I'll give you the plug, and I'm sure your listeners know it, that the author of Post Acquisition Marketing. One of the biggest things our prospective or existing portfolio companies or partner companies tell us they want help with, the number one requested thing is go to market. The number one requested thing is marketing, because the best kind of value add is organic growth, because unlike inorganic growth, you don't have to pay for it. And controlling costs, okay, that's all well and good, but that ain't nearly as much fun as the champagne bottles popping because things are growing, right? The growth's the holy grail. And when you get the Vision Prism right, it propagates through the go-to-market because you're clear on what you do, and that makes marketing a lot easier, and that makes telling the right story to the right customer easier. That helps you think about, because you're already in the mindset with that Vision Prism of got to think empathetically. It can't just be the one vision in the mind of a board chair or a CEO. It needs to be, how does the vision really resonate for suppliers, customers, employees, other board members? Helps a marketer, for example, think, with that in mind, how does my marketing resonate? Not for me. You hear people talk a lot about don't sell the features, sell the ROI. How do I put myself more empathetically in the customer's shoes and connect that vision to, then that can come alive. There's some real sizzle behind what you're doing. So yeah, the applications are broad.
Yeah, totally. And if I can share a personal example here, is just this business. Initially, when I first started it, I thought all kinds of software and technology companies would be our customers. And very quickly, I learned that private equity has a unique set of needs that we were uniquely positioned to serve. And so now if you go on our website, it's all about creating enterprise value, working with portfolio companies, due diligence. Like the book is called Post Acquisition Marketing, or the second one is called Exit Ready. It's all about, this podcast is called the Private Equity Value Creation Podcast. There's so many books I could have written about marketing, but the ones I wrote are specifically tied to our mission. It's very much about helping the end user, right? And so sometimes we miss out on other opportunities, but we are so uniquely positioned here that that's how we build the PE relationships that we have, and that allows us to have a pretty differentiated position. And people think of us first before other, let's say, marketing agencies and providers out there, and that's allowed us to grow over the years.
I like how you said that. You're very, I don't know if you would describe it this way. I would say, if you'll forgive me for putting words in your mouth, you're very systems driven. We pride ourselves on being very systems driven. We buy enterprise software. We partner with enterprise software companies. Engineering is literally all about the process, DevOps. Don't let me go down a rabbit hole on that. What you're saying, though, connecting the Vision Prism to enterprise value, how you think about, listen, it starts with a foundation of TAM and segmentation and product marketing and sales enablement and go-to-market. All that is fed by perfect clarity of who you are, what you do, your position in the market, what we would call that organizational clarity and that Vision Prism. But how you are expert at thinking about how that foundation, which is underpinned by organizational clarity, then feeds, okay, what do we do in terms of demand generation and our content and our website? What do we do in terms of our team and our budget and how we take the leads we're getting and convert them? And then what does all that mean ultimately for revenue maximization? And obviously revenue maximization is like a direct correlation to enterprise value. It's one thing to kind of, it's hard enough to get the vision right, but then the real work begins, if you will, is connecting those dots, threading that needle all the way to enterprise value. But to our broader point, trying to do it in a win-win way.
When you meet companies, do you find that they inherently understand this, or how often is it like is it 1 out of 5, 1 out of 10, 1 out of 3 that really understand this? And it not just on the marketing side, but when it comes to the product roadmap or what they're focused in on the sales side, like, do you see companies truly having this in place, or do you have to build it in most cases?
I would say that we build it in most cases. I would say in conjunction with the leadership teams, the management teams, they build it in most cases. But yeah, it's not there. But again, we've been talking this is like a therapy session. We're talking a lot about empathy in this episode. I like it. Let me put my empathy hat back on one more time. The answer to your question is, yeah, we don't see it a lot. That's not because silly company or silly management team, this private equity person thinks they have something figured out and every hammer is a nail. That's not it at all. I think that it is unbelievably easy for the urgent to crowd out the important. I fight that battle in my business every darn day. And when you talk to lower middle market software companies at kind of that 10 to 20 million in ARR mark, that is the hardest place to be. Honestly, just getting started out. Woo, that's fun. The ideation phase. I built Terminus myself. Believe me, I remember the early days, and that's fun. When you're really big and the flywheel's really going, not taking anything away from that, it is a little bit easier when the snowball's got momentum rolling down the hill. That chasm between like getting to be a real company, breaking through the 5 to 10 ARR, the 10 to 20, the 20, it's just so darn hard that most of the time management teams just have to firefight. You just feel like that phrase drinking from a fire hose, you feel like there are multiple fire hoses absolutely leveled at you. So they're like, I think most companies think, would it be great to nail my vision and craft my strategy in a pretty PowerPoint slide and think about how I can then put the right priorities behind it and think about carefully aligning everyone in my company and carefully having a great relationship with all members of my board and even make sure it's win-win for my customers and suppliers. They're like, that sounds nice, but that sounds too good to be true. And that's you talking as someone who doesn't know what it's like in the trenches every day. So it's not there because there just ain't time to put it there. And so we like to be that extra set of arms, legs, that extra brain, that roll up your sleeves partner alongside a company, not ownership, which is most private equity firms sitting on top of a company. And sometimes they have a very clear sense of vision and all this stuff. They just I need some arms and legs to help craft it in the right way. And then we're going to divide and conquer a little bit. I'm going to be rolling it out this way, but honestly, you can get more deeply operationally involved with your operations team, take a line role for a time and help us align, and you do it together. But yeah, often it's not there. And often it's not there because there's just too much going on trying to tend to the store. You know what I mean? Trying to keep the lights on.
Mm-hmm. Yeah. I completely resonate with everything that you said. It's one of the hardest things is to build a company in that phase because You're managing cash flow. You're wearing multiple hats. You're thinking about where the next deal is coming from. You may not have your executive team fully flushed out, or even if they are, you have to be an active coach and actively involved in a lot of domains. So you're just managing a lot of stuff, and taking a moment or even like a month or a week to do an offsite to figure out some of this stuff is not at all a priority for founders when they're kind of running and trying to do all these things at the same time. So
I,
totally agree with that.
I hate to confess this. We want to do an annual offsite. We're so busy at TCP, we had to cancel our annual all hands offsite this past September, and we kicked it to Q1 of next year. Like
Right.
I, I value humility, and I gotta be humble enough to admit what I can't even take my own advice. Right?
Right.
I hear you.
Yeah, it's one of those things. It's like we talk about this a lot internally. It's just like it's in the important, not urgent quadrant, and so it is important. You have to do it, but along the way, if there's a deal that needs to be closed next week or something else is going on that requires your attention, then you don't have time for it, and so you kind of have to figure out when is the right moment. On our side, we've probably done it. I think we did it once in the second year of our business just to get everybody aligned. And then since then, we didn't touch it until last year. And we did like a full internal process around it when things were less busy. But then we haven't done that work since then. It's just like, it just sits there, but we have some sort of an idea of where we're headed towards together. And then there's week to week stuff and month to month stuff. And I imagine it's the same case for a lot of founders who are at that stage where they don't have an institutional investor or they don't have the capital to be able to take that time to be able to do more of it.
That's when private equity. That's when private equity can help. If private equity can think, because there's a little bit of been there, done that. There's a little bit of doing all that research and benchmarking. If private equity could take that universe, all things a company can do, and be the, let me be careful with my language here, that SHI filter, can be that filter in order to take all that and say, all right, you know what? These are the key issues. Understanding the universe of what's possible, and you know what? You could implement CI/CD, and that would be great. But is implementing CI/CD and releasing more frequently, is that actually something that's worthwhile and drives enterprise value for your company? Or is that going to be a lot of process and training stress that you don't want to go through? Going through that entire universe, understanding it, having a deep enough partnership and understanding of the company to understand where its real opportunities or where its real pain points are, and then connecting those dots. You know what? Only so many hours in the day. Let's not get overwhelmed. We come up with a value creation plan together that is simple, and it fits on one slide, and we revisit it every quarter, and we often change it every quarter, but it's got to stay simple and it's got to stay clear, and we can bring the right tools or people to bear on that really short list. But if you focus on that really short list, you put more wood behind fewer arrows, you can get a lot done. We want to make sure we don't spread ourselves too thin or spread the companies we partner with too thin, because as we just talked about for the last 5-10 minutes or whatever it is, they got enough on their plate,
Yeah, as I'm hearing you talk, one and question on this as well is even on our side, we have so many different initiatives that we want to work on. So we currently are investing into a software that we're building ourselves. We launched a new book. Obviously, we have a course potentially that we're launching for marketers and PE firms and their portfolio companies. There's a bunch of initiatives. There's like 5 or 10 of them, and I had our COO pull up a list of all the strategic initiatives that we have, and it's like 8 or 10 of them. And immediately I was like, we need to cut 3 to 5 of these because we don't have enough time to work through these effectively to get to the level that we want to. And I think to like B2B companies, and there are often initiatives that seem good on paper, but then as you start to execute it, you slowly realize that you're drifting from your core purpose or your core mission or your core set of customers or the things that made you successful. Like an example that immediately comes to mind is going up market. Every company wants to go up market or down market or to a different adjacent vertical or thinks their software can be repurposed in some way. And so how often or how do you balance that? Because there's like your core, we talked about books. There's a great book called Profit from the Core, and there's your core business, and then there are the adjacencies that you can kind of extend into. but there's always this risk of spreading yourself too thin. And so how do you balance those two things, especially from this perspective of what your core vision might be?
For us, we use an ROI framework in order to force rank things based on how much time is it going to take and how much is it going to cost, whether it's hard dollars, people, which relates to that first, by the way, or opportunity cost. But that together becomes the cost and the duration. What's the enterprise, we force ourselves to quantify the value we think can be attained, even if it's something that's qualitative. Like it might be, we had an initiative called Staff for Stars at one of our company that was all about, because the company was growing really quickly, hiring absolute tip-top A-quality talent. Gosh, how do you really quantify that? Like, how do you, yes, let's do it. And that means let's spend this much on executive recruiters and let's spend this much on some applicant tracking software. And what exactly is the value going to be? And you know what? We found some research on the difference in perceived quality of management teams and valuation multiples. And so you don't want to have false precision on something, but we force ourselves to quantify it. So literally a cost benefit analysis, and then you force rank it according to the third variable, which is sort of confidence interval or how attainable do you think it is? So bad example, but if there were just literally excess costs, we had a company and it wasn't about squeezing the belt or anything. Going into COVID, literally unused offices in different countries. That wasn't like a shut down an office. That was like a no one works there. Even though the value from that was very low, it was actually prioritized number one because it was 50 basis points per year of margin, and it's quick and easy, and the confidence on that was so high. And EBITDA is EBITDA, and it frees up opportunity to invest in other stuff. Actually put that to the top of the list. So we force rank by looking at each of those three things: cost, benefit, confidence interval. That's how we think about it.
What are your thoughts? Because you earlier mentioned you buy and build, and where capital can kind of bridge that gap between taking on that risk, let's say organically, versus finding a way to invest in an adjacency without necessarily needing to build it from scratch, and where capital can support an initiative like that.
Yeah. So on average, let me actually do some math here probably a little bit less than 75. On average, our total equity hold size in a company is about 75% when we first get involved. So what I mean by that is, hey, execute the buyout or execute the recapitalization, and let's say that ultimately you're going to have invested $4 in the company, you've invested $3 in the company. There's going to be an extra dollar of follow-on investment. It might be because you actually want to invest in an organic initiative and hire up, but you know what? The bar on that has to be really high because you can't waste money, and it's easy to talk yourself into something that's pie in the sky. But it could be an organic initiative, or it could be an inorganic initiative, buying the right company in an adjacent market, the right product that complements what you've already got, in order to build a more compelling whole where that whole is greater than the sum of the parts. So we're usually looking to invest incrementally, not just all at once. And I like that because I mentioned I had a hedge fund background. When I worked at the hedge fund GMT Capital for years, we had a concept there called cumulative conviction. In public stocks, you can take a small position and then get really close to the company. And if the company is performing and you like what you're seeing, then you can add to that position over time, size up. I often found sizing up or sizing down the right positions was more important for my returns than just making the right investment decision in the first place, like buy the company, don't buy the company. That's hard to apply to private markets because it's private equity, it's illiquid. You either buy the company or you don't. It's binary, right? But for us, this buy and build strategy where we're trying to get a company from 10 to 35, 40. That usually means follow-on opportunities for investment. And the closer you're working with the management team, the more proof points you see, the more opportunity you see, you can size that up. So that's how we think about it. You brought up profit from the core. That is something we talk about all the time. It's a bad analogy because we're software, but I guess Nike is a classic analogy of you literally start with shoes, running shoes. So then what's the most logical, like how do you profit? How do you grow from that core? Well, make shoes for other sports. I got it. That's kind of the same thing. You're applying your core competency of shoemaking to different sports. Well, now that you're in different sports, you can make apparel for different sports. So you fast forward, and Nike is a gigantic sports lifestyle company that, they supply sporting goods. They make golf clubs for a period of time. They really run the gamut. But that wasn't haphazard. If you trace that back, that was actually very carefully thought through, logical product extensions because they were growing from their core. That's what we try to do with each of our companies. I already mentioned Catabat earlier in this podcast. Again, Catabat, credit borrower communication or credit collections software for big banks, but consumer lend, SoFi, Sallie Mae, US Bank. Okay, they serve big banks. But I also mentioned that one of the things that might have been holding the company back was people were like, how big is that market really? How big of an opportunity are you really going after? Does that get the company excited, the employees excited, future investors excited? So how do we go after a bigger market opportunity? The answer for that, we acquired a company called Simplicity Collect. Simplicity Collect was a SaaS offering for third-party agencies. Because if you think about serving credit, you can do it first party, like the bank. I made the loan and I'm talking to the borrower, like, hey, here's the mailing, or here's the text reminder, or here's the email, or here's the web landing page for you to log in and do your own service. That's first party. There's also third party, which is, hey, if something goes awry, you got to hand it off, and if something, then actually collecting is the third. Let's open up the whole market. Acquire Simplicity Collect, which is the same value proposition, the same kind of product, the same reason to exist, but in the third party part of that market. Now you've opened up the whole market. And by the way, if you've got first party customers who say, listen, I love your enterprise software, but it is pretty big and pretty hard to work with. I'm a smaller lender. I'm more of a startup consumer lender funded by VC XYZ. Do you have a SaaS offering? Yes, we do. It's called Simplicity. For some of the large agencies, Simplicity might be small or SaaS or not robust enough for them, even though Simplicity is incredible. It just targets a different customer segment. We can tell those third-party agencies, well, we have Catabat. So lo and behold, cross-sell. Once you had that, once you led that overall credit collections industry, not just third-party, but also not just first-party, but also third-party, then it's, well, what's next? Well, those same principles can be applied to overall revenue cycle management or AR receivables management, not just how a bank or a collections institution thinks about liaising with its customers. So Catabat was a company that very carefully and thoughtfully grew from its core. And there's a lot of tactics involved in that, but honestly, a lot of it came back to getting those chapter 1 issues right, that Vision Prism. I could bore you to tears with some of the specific playbooks around how we specifically implemented HubSpot because the company didn't have a CRM yet, or how we separated lead generation from deal closing because the company had 2 sales reps who had to do their own prospecting and demand generation and pipeline nurturing and then close it. And it was, hey, let's let you focus on what you do best and let's have I could talk about some of the specific tactics, but a lot of that really did come back to getting that right alignment on those chapter 1 issues. It made all that downstream stuff a lot easier.
Yeah, I think that's a great place to close out the episode. I think just this point that if you get that vision right and then you let it kind of find its way through all the different priorities and places where you're investing across the organization, across M&A, across where you're deploying your capital, good things happen, and eventually there's more enterprise value for everybody. So with that said, Alex, thanks for coming on and sharing your wisdom. Is there a place if people want to learn more about you or Terminus, what's the best way they can find you?
Yeah, check out our website, terminuscp.com. We are growing investment by investment by investment. So we're doing it the old-fashioned way. There may be a day in the near future where we start to do, sort of join the Instagram generation, start doing a lot more on social. A lot of people are doing that, and that's super smart. We're a unique blend of new school because all we do is software and AI and the cutting edge, but also old school, kind of building this company brick by brick with the right kind of partnerships. So the website's probably the best place at this point.
Got it. Awesome. So we'll be sure to link that in the show notes. And with that said, Alex, thanks for coming on and sharing your wisdom. I thoroughly enjoyed the conversation. I think a lot of founders, CEOs, and investors can take a lot away from it in terms of how they think about value creation planning and just starting with that ground zero or foundational question of why do we exist, who do we serve, and then slowly building out from there. So thanks for coming on and sharing that.
Shiv, thank you. I really appreciate it.
Thanks for listening to today's episode. Before you take off, just a few requests from our side. Number one, if you haven't done so already, please subscribe to the podcast on iTunes or Spotify or YouTube or wherever you go to listen to your podcasts. Number two, if you are in the market for due diligence services, strategy consulting, or fractional CMO services, please get in touch with us at www.hadasas.com. And third, please buy a copy of my new book, Exit Ready Marketing. It covers a ton of concepts that we take our customers through, private equity investors, B2B companies, CEOs, operating partners, and marketers. And there's a ton of great value in there that expands on my previous book, Post-Acquisition Marketing, as well. So with that said, I hope you enjoyed today's content, and we'll see you on the next episode.